debits, credits, cash and profit, assets, liabilities, profit and loss, EBITDA. What the hell is my accountant going on about? I don't understand what these terms mean. What's a debit? What's a credit? How does it impact my business's financial reporting? I need some help. Well, hopefully these videos will give you some basic understanding of the accounting. Sometimes you might feel that you don't understand why your profit and loss account shows that you're making money, but your bank account doesn't have that amount of cash in. Well, first of all, a little history lesson. In 1494, a Franciscan monk wrote a book, and he's known as the father of accounting. He recorded how merchants in Venice would record their business transactions, and they used a double entry system. This was the birth of debits and credits, and he recorded how they did this, and this was used as the basis for preparing a set of accounts. The theory is that double entry, every transaction in your business must have two entries, a debit and a credit, and they must balance. The two financial statements are a balance sheet and a profit and loss, and the double entry transactions are the movement between these two financial statements. So you may be asking yourself, what actually is a debit and what is a credit? A debit increases costs or increases an asset, for example your bank account. A credit increases a liability, money you owe, like a loan, and it increases equity. Equity is the value of your business. So the more sales you have, the more value the business is, hence a sales is a credit. So let's go through a quick example. You raise an invoice to your client for £5,000. You give your client a 30-day payment term. The double entry for this is credit sales, as you're increasing value of your business, but you debit debtors because he owes you money. So the balance in effect is zero. You might say, well, why is a sale a credit? If I give a credit to someone, I'm giving them money back. It can be so frustrating to understand. Sales increase your values, hence why we use a credit. The credit needs a debit side though. There's a double entry needed. It can't be complete without it, and so if it's not, this is what blows an accountant mind. They need to have balance. So if you've got payment terms, where do I put the debit if I credit the sales? Well, this is an asset now because they owe you money. They are a debtor. So on your balance sheet, they will be shown as an asset, i.e. someone who owes you money that you can collect. But in the profit and loss, the sale is shown as an income. So here we have balance. The balance sheet and the profit and loss agree. So following this example through, the profit and loss show your performance, i.e. what the business has done. The balance sheet shows what you own as a result of that performance. So sales are now £5,000 and the debtors are £5,000. What cost of sales? Well, in this example, let's say £3,000. What are the accounting entry of this £3,000 that perhaps went to a freelancer? Well, you're increasing your costs. So a debit increased costs. So you debit the costs in the profit and loss 3,000, and you credit accounts payable, assuming your freelancers give you credit terms. The accounts payable is something that people owe you now, so you are owed money. The entries now show that your profit and loss £5,000, your cost is £3,000, your profit are £2,000. The double entry balance. So what does your balance sheet look like? Well, you have debtors, because that's what you're owed, creditors what you owe. What you own as a business is the net figure, the 5 minus the 3, which leaves you with £2,000. This is known as net assets. This now balances with your P&L, as your P&L shows that you've had £2,000 profit. Now, you've been paid by your customer and you debit your bank £5,000. This is because your cash has increased by £5,000 or your bank balance has increased by £5,000. But what's the credit entry side of it? We always need a double entry. Well, as your assets have increased, something must have decreased. Well, your debtor is an asset which you did own, but now you don't own that because that has turned into cash which you now own. So you must credit something, and the credit entries reduce your assets. So what are you reducing? Well, the profit and loss doesn't change, your balance sheet value does not change, but it does now show the type of assets and liabilities that you have. The balance sheet will show that you have bank of 5,000, debtors of 0, creditors of 3,000, net assets are still £2,000, but it shows now you have cash as an asset, not a debtor, because the credit side reduced the debtors. And now we pay our freelancer. What are the accounting entries for when we pay? Well, we're reducing the bank, so we credit the bank account 3,000. You've also reduced your liability to the freelancer, so you no longer owe him any money. But what is the accounting entry for the opposite side of the credit entry for the bank? What are we debiting? Well, you debit your creditors. Remember, debit reduces a liability. The profit and loss is not affected. It still shows your business performance as £2,000 profit. All you're doing is debiting creditors. So your bank account now will show 2,000, debtors 0, creditors 0, your net assets are £2,000. Your profit and loss is £2,000. Your accountant's happy and he can sleep easy now because his balance sheet and profit and loss, they all balance. Remember, a profit and loss shows your performance. Balance sheet shows what you own. Or owe, and that's if your borrowings outweigh your assets. Debit, increase costs. Debit, increase value. Debits, decrease a liability. Debits, decrease your value. Credit, decreases assets. Credit, decreases expenses. Credit, increase liabilities. Credit, increases value. Credit, increases sales. But sometimes when I see my accounts, my profit shows a very different figure from what's in my bank account, and I don't understand why my bank account may be lower but my profit is higher. Well, this is called accrual accounting. It's something we have to discuss in another video. But for this video, remember, your profit and loss is a view of your business performance. Cash flow is the actual cash in and out of your business, and a balance sheet, what you are owed or owed less what you owe. I hope you found that helpful.